Today I'm going to discuss the topic that is fund flow statement. So basically what we mean by fund flow statement is very important to understand here. So the fund flow statement is a statement that explains the working capital change in a company, and basically it is an analytical statement of the changes presenting its financial position between two balance sheet statements. So it depicts the monetary outflow and inflow of the sources and the application of fund during a particular period. So basically a company prepare a P&L statement and balance sheet. Then what is the basic need? Why we are preparing fund flow statement? It's the main question. So the answer is that the P&L statement and balance sheet are two statements that portrays or depicts the financial position for the past and current year. So they do not explain why the financial position has changed. So that's why where the fund flow statement is required and its need for long and short-term funds. So it also explains the following: fund sources, or where the funds came in from with their sources, and fund application, or where the long or short-term funds have been used. So companies have long-term funds in non-current assets like patents, like other investment in various companies, plant and machinery, intellectual property rights, equipments, building, etc. So thus non-current assets are created in a financial year whose monetary value is not fully realized in that accounting and financial year. So due to this, two situations arises, such as when the long-term funds finance the non-current assets. So the fund flow statement will reflect these assets utilized from the long-term funds, and these changes can be understood. If the company is usually using only long-term funds to finance the non-current asset, it is deemed as a healthy organization behavior that is growing positively with a proper fund usage. And when the short-term funds finance the non-current assets, the changes in the fund flow statement reflect usage of short-term funds, and this is undesirable as it indicates the dangerous use of short-term funds on a long-term investment, which is highly risky. So especially when the company is likely to be cash strapped for its short-term needs and financial obligations, since the investment are long-term and cannot be easily liquidated. So thus the fund flow analysis can pinpoint the change and application of working capital, so be it long or short-term funds, through its utilization, and is an index of its financial health. So it is widely used to interpret the impact of changes in funds position, and its uses is an interim period between two balance sheets through its proper interpretation. So basically the components of fund flow statement are its sources of funds, which may be from the outside, and capital brought in by the owners, and detail on how the funds are utilized, namely whether they have been used on fixed assets or on current assets. A few benefits of the fund flow statement are as follows. Basically, it is an aid to fund manager in explaining the strain on working capital and liquidity of a company. Through the P&L statement, we declare it to be profitable. So it helps the funds manager explain the financial strength of a company despite its operational issues. And it helps also the fund manager analyze the fund flow and risk level when misusing short-term funds to finance long-term assets. So usually this is a gray area that is not reflected in either the company's balance sheet or P&L statement. Now the next question is that who uses the fund flow statement? So of course the lender of funds want to know the company's health before investing in it. So they are very curious about the company's health. So the fund flow statement would be a significant area of interest, since they assess the utilization of funds rather than focusing on the operational losses or profits declared in a company financial statement. So basically, an excellent example of this is banker. So who utilize the fund flow statement to assess the company overdraft and cash credit facilities. So basically, the fund flow statement is to be prepared in 3 steps. The first step is the preparation of statement of changes in working capital. The second step is to calculation of funds from operation. And the third step is the preparation of sources and uses of funds. So this is a format of first statement, that is statement of changes in working capital. And you see here it talks about the two things, that is current assets and current liabilities. So these are all the various current assets. It includes cash, bank balance, BR, bills receivable, debtors, stock, inventories, prepaid expenses, accrued income, marketable securities, short-term investments. So these are all the current assets. And then in the next step, we have to calculate the various current liabilities, and CA minus CL is equals to the net working capital. And on that basis, we have to calculate, that is, there's an increase in working capital or whether it is a decrease in working capital. That this is the second step where we have to calculate funds from operation. And you see here, we have two methods to calculate funds from operation. The first method is the direct method and the second method is indirect method. So this is the format of direct method. So under in this method, we have gross profit, and in the gross profit we have deducted the various expenses, and in debit side we have a figure, that is the balancing figure, that is called funds from operation through this calculation. And this is the format of indirect method, how to calculate funds from operation through indirect method. So you see here, first of all we have taken net profit after tax for the year, and in this net profit we have added non-operating expenses, includes depreciation, loss on sale of fixed assets, interest on debentures, goodwill written off, provision for tax, proposed dividend, interim dividend, and transfer from a statement of P&L, and deducted non-operating incomes. It includes interest on investment, dividend received, profit on sale of fixed assets, interest on bank deposit, refund of taxes, and on that basis we have able to calculate net fund flow from operation. So this is the balancing figure. And the last step under the preparation of fund flow statement is the statement of changes, statement of sources and application of fund. So basically any change in asset and liability may result in inflow and outflow of fund, but not always in case of depreciation, devaluation. So there is no inflow and outflow from. So hence only those assets and liabilities will become a part of the statement of this statement, which actually leads to the flow of the fund to from the business. So this is the format of fund flow statement. You see here there are two bifurcation under this format. The first side is the sources side and the second side is the application side. So basically the next question arises that what is working capital? So working capital is the money used and available for a company day-to-day expenses on business operations. So it shows the fluid financial liquidity of the enterprises and is very crucial to continuity and growth of the business. So hence working capital is required to be used judiciously and managed well. So we have just seen how working capital impact the fund flow statement and on the business health. So in the definition of fund flow statement, the working capital is shown as the current liability and assets and long-term or short-term capital funds. So let's explore what these are. So current asset means the asset that you can easily convert to cash in the short run. Similarly, current liability are those that needs to pay within a year. So, under the preparation of statement of changes in working capital, we have calculated two things under this statement. The first is the where there is an increase in working capital. So what reflects in increase in working capital? The situation arises when the net working capital, when a business has increased current assets. So this can be defined by increased receipts or other assets, or an decrease in current liability may lead to be such a situation. So this means fund can now be used effectively by the company to meet its working capital requirement, to pay dividends or pay off some of its short-term outstanding loans from its long-term sources, such as companies financially healthy and a good bet for its investor capital. So when there is a deficit or decrease in working capital, what it impacts? This situation arises when the company has fewer long-term sources, more funds utilization points, such as company has to be raised to loan to meet its commitments, and investors would look to invest in the working capital needs to be such a profitable company. So the company that gets such working capital facility can reduce the burden of funds needed for its working capital and uses or divert it to create long-term assets. So due to this, the fund flow statement has various advantages apart from highlighting a company's health. So it also show in the working capital reduction to generate funds from funds that can be used or long-term commitments, that how using different assets can effectively change the sources of fund by using it appropriately. So effective understanding of the company fund flow statement and investor input is very crucial. So it reflects the changes in sources of capital and fund utilization purposes. So the excess of deficit in a company, that current liability and assets is thus effectively portrayed only in the fund flow statement, not the P&L and balance sheet. So this is the main motive behind why we are preparing fund flow statement. So what are the various modern practices why we are preparing fund flow statement? The remain, it is very financially sound. Every company should frequently analyze its fund flow statement to make adequate business decision. It also needs its P&L statement and balance sheet to portray the company present situation and needs for funds when approaching banks, investors, etc. for working for capital funds and loans. So today's most of the businessmen use advanced technology for accounting, such as Tally or ERP softwares, to draw up these complicated financial statements instantly. So through this, they can use the analytics reports of the software and financial statements. So they can use this in strategizing and growing the company by making smart business decisions. So this is all about the fund flow statement. And the conclude point of this is that uh, uh, what a fund flow statement is and how it impacts the working capital, which is company's bloodline. So we hope we have clearly described how fund flow statement is vital for explaining the changes during the interim period between the two balance sheets because of the changes in company's financial position. So Biz Analyst is a useful app also, which help to stay connected with your business, improve cash flow, analyze your sale to improve business growth. And on the other hand, Cashbook helps in tracking income and expenses of business, adding multiple members to the Cashbook, generating various reports for your company. So therefore, both of these applications can prove to be tremendous beneficial for the company, safety and secure accounting. So the key takeaways of this session is that what do you mean by working capital? So the working capital is equals to the excess or deficit between current assets and current liabilities. And basically the essential components of the fund flow statement are its sources of funds from outsider and the capital brought in by owners, plus details on how the funds are utilized, namely whether they have been used on fixed asset or in current assets. So working capital ratio is equals to current assets divided by current liabilities. What do you mean by current assets? So current assets of a company have monetary value. They are easily converted into cash, like bank balance, good inventory, raw material, deposits, investments in other company, intellectual property rights, patents. What do you mean by fixed assets? It includes building, machinery, land which cannot easily be liquidated. So this is all about this session. Thank you so much to all of you.